Great. So let's get started. Thank you, everyone, for your patient wait. Good morning, good afternoon, good evening to everyone joining us based on whichever time zone you're coming in from. We, of course, have people coming in all the way from across East Coast in US to parts of Southeast Asia. So wherever you're coming in from, thank you so much for coming here and welcome. You joined us for what is this latest edition of Sankalp Dialogues, which is Sankalp Forum and Intellecap's year-round conversation series, where we are bringing together people that are actually building the impact economy to wrestle with the questions that don't have easy answers. Now, the Sankalp platform has itself spent more than 15 years convening entrepreneurs, investors, and policymakers across the global south. And these dialogues are where we go deep on the issues that matter, albeit in a smaller and more honest setting, hopefully. And today's question is one of those that sounds simple until you sit with it, which is whose carbon is it anyway? Now, carbon markets were built on a promise that money would flow from those who pollute towards those doing the hard, real work of reducing emissions. And so much of that work is actually happening in the global south, right? Across India and Kenya's forests and farmlands and other parts of Asia and Africa. But after years of scrutiny, the honest question really is no longer just that is this carbon credit real? The next layer or the phase of this question is whom is this real for? If a project checks every box on paper, but the community that made it possible sees none of the value, has the market actually done its job? So that's what we are here to unpack today. Not in theory, fortunately, but with people who do this work day in, day out. So let's, without further ado, actually go on and introduce them. First up, I'll be introducing Atul Mittal of Earthtree Enviro. Now, Atul and his team are building carbon projects on the ground in India. His flagship one currently being a forest restoration project in Meghalaya that's working hand in hand with traditional community land systems. He's the voice today for the real human and often messy work of project development. Next, from Nairobi, we have Ramji Krishna as part of Kenya Climate Ventures, an investor backing early stage climate enterprises across Kenya, many of whom actually depend on carbon as a source of revenue. Ramji and his team are making sure these projects at the moment, right from the time capital is being committed, therefore actually perhaps have the best seats in the house as to understand what's really fundable and what isn't, right? We then also have with us Sanjana Somani from the climate team at Intellecap. Sanjana has actually now spent a couple of more than a few years as being the technical person or the technical expert on carbon projects, right from structuring the finance, drafting agreements, to also advising both sides, developers and buyers across India and East Africa. She brings that larger systems level view of how these deals actually come together, right? And last but not the least, we have Umang Pathak from Trilegal, one of India's leading law firms. And Umang herself has spent a large part actually structuring real carbon transactions under India's latest carbon market framework that's actually kicked in this year, and also advises a fair bit on the cross-border deals that are shaping this policy. So she'll be sharing with us what the law actually allows, requires, and also sometimes fails to protect. So we have with us a genuinely diverse and exceptional group across a developer, investor, lawyer, and an advisor. And that's exactly the kind of perspectives we wanted in this room, right? So without further ado, for the rest of the people joining here, we actually wanted to start with a quick poll that will come up on your screens very quickly, very shortly. And the idea to do this is also to get a pulse check really of where the different folks joining in today's session sit on this particular question, right? So we'll have this flash for about 10 seconds. If you can quickly give in your responses, and from there we can actually move on to questions for the panel. We're going to give this another 5 seconds. Perfect. We'll pause this here, rather move on from here now. So I think to get right into the thick of things, I wanted to actually start perhaps with Umang itself from the Trilegal team. Umang, I think would want to perhaps start with the fact that at this point in India, what for you is really the single biggest legal or regulatory gap that you see holding back high integrity carbon projects?
Hi, thank you. Thank you firstly for having me over and inviting to be part of this amazing panel. And I'm actually looking forward to getting the technical and the real expertise from people who are here with grassroots level experience. Specifically on your query, so I think let's start with the larger Paris Agreement to begin with. We all know the aim is to bring down the temperature, the sustainability in true sense of the planet and its people and communities is heavily dependent on what we do now, right? All the industrialization and now scientifically and technologically we are way much more advanced to understand emissions coming from each and every activity as individuals and as the institutional stakeholders, whether it's corporate sector, whether it's government. So first of all, there is Article 6 that we're all familiar, which lays down the basic framework for setting up the markets, the bilateral market, which is under 6.2, 6.6, and basically the old UN CDM mechanism is also going to shape up in a different manner. Now, what is happening currently globally and as well as in India is the distinction between their technology solutions and the nature based solutions as agroforestry, land use, and other nature based solutions. While between CDM and now our own Indian market, there we all are familiar with the VCM, the voluntary carbon market space that evolved. Again, leveraging technology. And as you rightly mentioned, Global South has been where the most assets generating carbon credits, especially with regard to FLOU and the nature based solutions, have been there. I was just before this only trying to see how much of that capital has come about, and the latest number between 2013 and 2023 is almost $23 billion is the money that has come under the total voluntary carbon market project capital expenditure only in the nature based solutions. Of it, as you rightly mentioned, is in Asian and African space. Now, as India has set up its own market and our presence in the BRICS framework, also we are part of the Agribusiness Council's working group at the BRICS level. We have studied the BRICS countries and their carbon markets also as they are evolving. And if you look at other carbon border tax and mechanisms where the space for carbon credits or decarbonization is being created, I think the biggest institutional challenge currently is that the nature-based solution and AFLOUs, they don't form part of the main market. So even Indian CCTS is premise, the architecture starts from Energy Conservation Act, under which we issued the CCTS, the Carbon Credit Trading Scheme of 2022. Now, what it does is, while it notifies certain sectors, there are 9 sectors which are hard to abate sectors, all your steel, cement, and all these companies which are mandated to start decarbonizing. So there are regulators and all. I did not get into the framework and the technicality of things. So basically, each of the company and each of the sector is notified and mandated to start decarbonizing. And where there is gap, that gap has to be fulfilled by the carbon credits. But the forestry, FLOUs or nature-based solutions, they are not covered in the main. This is under the offset mechanism. As non-obligated entities, you can design these projects and there is market for it. It's not keeping it under this is going to impact that way. But if we are to create a market, then we should create receptivity of it to also have carbon credits being generated from nature-based solution and FLUs as to be able to factor in for that demand that is coming from the compliance requirement. The issue or the concern in this sense is that there is no mandatory benefit sharing or any consent requirement as such, which is factored in already. It's mandated in the scheme of things. Though these protections are available in under other legislations such as Forest Right Act and Forest Conservation Act, where there is an acknowledgement of the indigenous community which lives or is ancillary. So village gram sub panchayats are also empowered under these legislations to provide that consent. But the consent's mandatory requirement is not, as the market is evolving. There is a lot still to be done. The market is notified, the sector is notified, but yet as of now, if you one gap, if I have to name, there are many other things or technical things like whether the credits will will be available for the other carbon related like CBAM or other factors that influence what would be the carbon pricing in this scenario, how would be the rights and obligations between entities. All those things are still very much unknown. So I'll just stop here and
Yeah.
let the conversation flow and step in when needed.
No, thanks. Thanks, Umang. And that actually also sets it up well for me to actually go to the carbon developer in this piece. That's Atul and his team. Is Atul, from what at least I'm given to understand, much of the work that you're currently doing, especially this landmark project in Meghalaya, would somewhere fall under the NBS category that
Yes.
Umang pointed out. So I think just to start us off, what for you has been the most difficult part of building such a carbon project where community welfare is front and center?
Correct. And I guess it's a very important question. Just a sound check. Am I audible? Okay, good. See, Danshu, one, the most difficult part when we do a carbon program, let's say we do a ARR program, we do a nature-based program, the most difficult part is not the technology. It is not even the methodology. I would say not even the financing. It is 100% how do you onboard the community and how you create value for them. So this is the top line. Correct? Now it has challenges. We've been facing a lot of challenges. We've been trying to overcome many challenges. The biggest one which comes to my mind is trust deficit. And this is something which we've been trying very hard to overcome. But there are reasons for this trust deficit. Say, I would give you my example only. In Meghalaya, we are doing a project called as Regeneration Meghalaya, which has a mandate to install 40 million trees in 3 years. Now, and it's a very large scale program. And we go to the farmers. Probably we are not the first one who are going to the farmers, even from Meghalaya. There must be some NGOs, there must be some government schemes, there must be some solar companies. Many people would have gone. They would have given them certain kind of promises. And God knows, at least there's a hint that many of the promises have not been fulfilled. So they see you as just another person because you're offering again a program which is 30 to 40 years of time. So you typically fall into that category only, that people would have come before, now you're coming, so what's new? So that trust deficit is something which needs to be worked on. I think no methodology, no finance can actually accomplish this. This is high degree of social engineering. Then once you are able to, let's say, break ice and create some trust, the nature-based programs are long driven. The time problem is another very big factor. Let's say for ARR, it's 40 years, 30 years in some cases, and you're making a contract with dad. After 40 years, dad will not be there 100%, or either will not be there or he will not be in any decision making position. So there would be at least 2 or 3 generations change till the carbon program will last. And that becomes a very big factor in terms of how do I trust if I'm agreeing to a proposition, my second or third generation would reap benefits. Those kinds of questions are very common and they have to be dealt with. We also, when we go, we don't have a perfect answer, but we try and bring a lot of governance design, a lot of periodic meetings with the communities. We not only meet the landowner, we also meet his community, we meet his nearby NGOs and institutions, so that there is a third party endorsement also to the landowner that, yes, I've understood this program. Some of the educated people will come and say, I've been tracking this company. So we require a lot of third party support to address the timing issue. Now, timing issue also can have also one more part, which is the livelihood timing mismatch is there. Now, let's say for any NBS carbon program, I will speak more about ARR. I will not today speak about soil organic carbon or biochar because they have different kinds of challenges. But for at least for any land use project, whether more importantly ARR, the first credit issuance will happen between, let's say, the best case 3 years or ideally 5 years. Now, to hold that landowner for 5 years without any benefits, this is, I would say, a tolerance test. How much they can hold their nerves. And you promise them that you'll get 100 credits and you will get 80 credits. That becomes a point of bone of contention. Those things add complexity to the trust challenge, and all those things are very difficult. And the last I would say is accountability gap. Even like Earthtree, our company uses our tech stack to the best. We have satellite imagery, drone surveys, we've got canopy measurements. We also started dynamic baseline. All these things we are doing for VVV to get satisfied. But the bottom line is that always I would say the accountability flows upwards from developer to the registry to the buyer. No one considers the landowner, which is something very strange. And this also brings lots of distrust. So I would say that markets are moving faster. The honest answer is unless you are building very value to the farmer, we try and do a lot of interventions like soil conservation, water harvesting. We do lots of agro commodities. We also started agrotourism. We try to connect the farmers so that they understand that there is value in the trees and there is value in the connection with Earthtree. This is how we are trying to do. But honestly, this is very difficult. I would also take the part of markets, that if markets were not there, then this thing would not have happened. A very good saying is that people traditionally used to know that the value of the tree is when it is cut. Now we are telling them the value of the tree is when it is not cut. So this is a very big behavioral change, and a lot of things have to go there. Sudhanshu.
Thanks, Atul. I think two things I'd want to maybe double click on and from there move to Sanjana, right? One, I think, is this understanding for any carbon developer that you need to be from the get go taking a very holistic approach in terms of building that community connection, because the default relationship that they see this as is transactional until proven otherwise. And I think a big learning for especially countries or places like India is maybe in tandem while all these sort of market mechanisms are improving or evolving, to also lay focus on aspects like land records, right? Which again traditionally have been so poorly managed or regulated in India, is that there's such a serious trickle down effect or repercussions into elements now on the carbon trading side. Sanjana, coming to you, right? I think having now seen with the project that you all have been involved in, I'm referencing the West Bengal one here, is what have been some of your learnings there in terms of both involving the community from the get-go at the design stage, right? And also seeing how does that sort of help develop a high integrity project in itself.
Thanks, Aranchu. I think, yeah, very pertinent to talk about how communities are being involved in carbon projects because, like Atul mentioned, right, these are such long term projects that without the support of the community, it's impossible to ensure that you have the longevity in your projects that you need. Involving community is very essential at the design stage, but I'll take it a step further and say that you need to constantly involve them as your project is evolving as well. A couple of things I think that project developers end up missing is that trust or their accountability that again Atul mentioned. And they end up following this pattern, right? Where it's just that, okay, let's look at a benefit sharing agreement or let's look at a benefit sharing contract where we're giving a percentage of carbon credits to farmers. But often that is not what the community wants or is not the motivational factor. Working with the project that we're doing in West Bengal, again, it's an agroforestry project. What we've tried to focus in our conversations with the farmer is that how do we develop a value chain, or how do we take their products that they are growing from our project to the market? And that's the incentive that sort of motivates them to make sure that the trees remain in place, that they're taking care of that project and they're feeling that ownership towards that project. Again, I have had projects where we're looking at what is the other type of incentive apart from the revenue that flows from the carbon credit that can be given to the community. So, do we establish a mill over there, or a cold storage facility, or something that increases the livelihood of the communities? So, I think we need to be a little bit more creative when we're looking at what drives the community to be involved in the project. And if we do this at the design stage, it is easier for the project developers to also build the project around what is driving the community. Also, take those costs into account, because as your project evolves, you will more often see that the costs of these projects keep increasing. And if you don't account for them at the design stage, it becomes very difficult to then take your promises through to the community. And that's where a lot of mismatch, distrust, and project failures happen. Moving to, I think, high integrity, again, community benefit sharing or just involving the community is a big part of integrity, right? And there are other factors that qualify a project to be high integrity. But as much as we hear this word high integrity, there isn't a very defined concept of what is high integrity. And there are institutions like the ICDCM now and the Voluntary Task Force that are trying to give us a better understanding, even credit rating agencies that are saying that there is certain parameter if you follow a project will be high integrity project. But again, it really differs from project developer to project developer. And while carbon standards and all of these institutions, they ask you to have a strong baseline, or they ask you to have a strong additionality incorporated in your projects, there is no benchmark. So today, as a project developer, I can go towards establishing a baseline using secondary data and still call my project to be a high integrity project. Or I can actually take the next step of getting, let's say, instead of secondary data, farmer level data or actual ground data to develop my MRV systems. And that can be defined as a high integrity project. So I think it is important, again, that at the design stage, we start evaluating these concepts a little bit more thoroughly. But then as the project evolves, we continuously see how are we adhering to the baseline that exists 3 years later, or what is the ground scenario that we need to change in our project that makes sure that our project is still relevant and it's still going to be one that can face the test of time. So yeah, those are some of my comments on high integrity. But yeah, just making sure that I think we have certain benchmarks and again, I think these standards and registries evolve. Like I know that like now methodologies get updated every 2 years. So that is something that is becoming an integral part of making sure that yes, your project is being most relevant, and it's not something that becomes a challenge after 7 years saying that, oh my God, you overcredited your emissions, or you didn't give back anything to the community. So yeah, I think with institutional help as well as some benchmarks from the industry, I think we'll get a better sense
Sure.
of what high integrity is. And yeah, and I think even buyers now constantly seek for that high integrity. So as long as that demand is there, your project developers will move towards the direction where they start incorporating these principles.
Sure. Thanks a lot, I think, for setting that context, Sanjana. And I know while a lot of that focus of your work has been in India, I think a lot of what you answered would resonate across other geographies and contexts as well. Coming to other geographies, Krishna here from the Kenya Climate Ventures, wanna come to you. One, of course, with this extremely difficult position, I'd say, in some sense, because you're looking at investing projects or commercial investments in some sense, which until recently and even today, probably in many ways, don't have an established playbook on how you invest these projects, right? So I think first up, just for I think a lot of people here to get better context is At what point would you start looking at a carbon project or its progress to be this is something investable? And very simply, how does evaluation from there on evolve? Right.
Yes, thank you very much for this question. And also the increasing discussion around carbon financing and project developments. This question, when it comes to investors like Kenya Climate Ventures, it becomes more of a due diligence question to us. And it guides us into understanding exactly what we want to see and what we want to achieve. So one thing that we do before we make such an investment, we need to know if your carbon project fits within our sector fit. And for information, we have 5 key sectors that we invest in, which include waste management, water, commercial forestry, agribusiness, and renewable energy. And once that is a fit for us, and then we also need to know, for example, when it comes to carbon projects, these are very sensitive projects that we are trying to look into. We have not made an investment yet, but we are trying to move towards that direction. And one key thing that we are trying to ask ourselves as investors, as Kenya Climate Ventures, is that who owns this carbon legally? Who owns it? And when it comes to the social ownership, who is the rightful owner? And commercially, who is the rightful owner? Because if this is not answered, it becomes a very high risk for us as investors to put in our money into such an investment, because we have had examples of some projects being suspended, or they simply become unsellable in the future when such questions are not answered. So one other thing that we also look at as investors is that we're trying to say carbon finance alone cannot be sufficient to build resilience within the community, and also to build a resilient climate enterprise. Because these enterprises, they also need investments. Investments can come in form of capital and technical assistance like KCV provides. At the same time, some of these enterprises, they still need grants. So does this investor provide grants? Because some of them, when they're applying for investments, yes, for us, we are looking for commercial capital, but then we want to deploy commercial capital, but this particular enterprise is looking for grants, which may not fit within our mandate to issue. And also another key thing would be looking at key impact areas where this carbon project is supposed to contribute towards. Yes, we are looking at a lot of things. We are looking at bond financing, but what is it apart from generating carbon? What other impact do you generate to the community, like the previous speakers were discussing when it comes to community? So as KCV, we are not looking for projects that are simply generating carbon credits, but we are looking for businesses that generate measurable impacts, and also at the same time, they should be able to remain commercially viable. And the other aspect that I would look at would be the aspect of authorization and legal clarity. Like, for example, right now we are having under the Kenya Climate Change Regulation of 2024, when it comes to carbon markets, that every project needs a letter of no objection or a letter of authorization and project registration with the National Carbon Registry to give us that clear answer on who owns the carbon. Yeah. And is it the developer or the community, or is it the state? Because we saw what happens when this isn't answered well. We saw one particular carbon project, which was once Africa's largest soil carbon project, which was generating carbon since, I think it was around 2013. They had to suspend their generation around, I think it was around 2025, following some legal issues within the Kenyan court, especially when it comes to community consent. And then that leads us to the aspect of when the community consent is not there, the two previous speakers were talking about, it becomes also a little bit ambiguous. So what we as impact investors are looking at is that, is there a presence of a documented FPIC process? FPIC is a free, prior, informed consent, which is also a regulatory requirement under the 2024 regulation, where community development agreements with documented FPIC for any project on public or community land needs to be put in place, and it's a requirement. So we don't just ask for it. And was there a community consultation or what community meeting, but we ask for the report and who signed it. We need to validate who signed it and whether the community land management committee was democratically elected during this process, because it's a little bit interesting sometimes. You see some of these project developers, they form committees that do not really fit the interest of the community. So these are some of the things that we check in addition to the legal clarity. And then what Sanjana was talking about, the benefit sharing, what is the mechanism in place? Where we look at what has been put in place when it comes to benefit sharing, not just the percentage. For example, the law says 40% of net earnings should go to the community for land-based projects, and 25% of this for non-land-based projects. And also, we're also trying to look at how is this being remitted via the community development agreement. But also, as an investor, what we look at is that who administers these disbursements to the community and on what cycle is it being administered. And what we say is, were these disbursements transparent enough? Yeah. It's more of a safety net on our side. We're also trying to protect our reputation to invest in projects, not to invest in projects that also does not respect the rights of the community when it comes to part of ownership of the project. And then the other aspect, which is key, would be the aspect of additionality. Sanjana talked about integrity, project integrity. Like we have had scenarios where you'll find project developers are self-reporting and monitoring on their baselines and also on their carbon generation. But again, when third-party verification is done, you'll find there is a very huge divergence in materiality from what has been independently assessed. So we try to look at a lot of issues in regards to that so that we also protect our investment and also protect our reputation as investors, because we are also looking to generate a bit of revenue from our investment. And then the other key issue is, does the project host country have authorization over the project? Because we had one major player that collapsed earlier this year in Kenya. Yeah. After 11 years of operation, just undone by a dispute with government over the volume of credit it intended to sell internationally without the right letter of authorization. So those are some of the key issues. And one key thing that we were trying to look at is that, like I said earlier on, we are not simply trying to look at projects that generate credit, but does this developer has an off-taker already to safeguard our investment? Because we are not going to come into investment with the hope that you will get an off-taker or you'll get a buyer for the credit. So we need a safety net. If there is an off-taker already, what volume are they going to purchase so that we can guarantee our investment? Yeah, those are some of the few areas that we're trying to look at. I think in the meantime, I'll stop there. Thank you.
No, thanks, Krishna. I think two things really come through here, right? One is that given the variables on every other aspect of generating returns, both commercial and from the community aspect, the more number of guardrails there are, and at some degree, some accountability in this paper trail that's being generated is what will in the future also put investors like KCB and others a little more at ease before reviewing or looking at some of these transactions, right? But something you mentioned at the start of the response with regards to the role of grant capital. And in the Indian context, if I take this back to the potential role for CSR here. So Umang, if I could bring you in to one, maybe shed a bit of light on how is this possible, if at all, and where do you see this role maybe getting a little more amplified, right? Because these are still early days overall.
Yeah, sure. So I think legally, let's look at two key provisions simultaneously. One is where we have a stakeholder capitalism integration in our company's legislation. So we have put in the law that board has to act in the interest. It's the duty of the board to act in the interest of its shareholders, employees, community, and protection of environment. That's one provision. And simultaneously, in the same 2013 companies legislation, we got Section 135, which lays down the CSR provision, which mandates companies, irrespective of being public, private, MNC, non-MNC, etc., on basis of their net worth, profit, and revenue as deciding criteria, to spend around 2% of their profit on CSR activities. Correct? And these activities are suggestively also incorporated in a schedule to the company's law, that is your Schedule 7. So, if you go purely on the carbon projects, for example, and specifically with agroforestry or nature based solution, there is one entry where we talk about ensuring environmental sustainability, ecological balance, and protection of flora and fauna. If you read it liberally, then you can say that all the carbon related activities, so like afforestation, reforestation, agroforestry, mangrove plantation, so these can be very well covered. So
Yeah.
CSR funds can be definitely be spent to develop, but the regulator and the ministry has over time has clarified that these are wide range of activities should be interpreted liberally, but this should primarily be with the benefit for the community, that there should be a social impact. So what we are trying to say here is that when you set aside 2% of profit, that profit shouldn't come back into the company as the commercial benefit of it. So while you can spend on carbon or decarbonization initiatives, you can't use the same funds to buy the credits, derive any other kind of benefit out of it. So I'm just reading between the lines, there's no clarification from the regulator on this. What can be done is a company can fund an afforestation project, for example, where the community remains the credit owner. And if company do want to use these credits to set off its own obligations or for its net zero goal or something, then at a fair market value price, you can buy those credits from the community, thereby creating, of course, a revenue channel also for the community and the farmers, or however, depending on the project that you design. There can definitely legally viable and also socially viable project that can be designed using CSR funds.
So I'm gonna just quickly add on and get like a follow on from you on this, Umang. Is fair to then assume that the current scope of this Indian carbon market mechanism is fairly protective or working towards the protection of the communities in terms of at least how it's defining the scope?
Okay, so now, like sustainability in general, if you talk about the legislative and regulatory framework, it is very vast, very multilateral. There are application of many things in the mix.
Sure.
So you make a proposition and find a direct answer, that usually does not happen. What I can say is that the protection, one of the main reasons to keep agriculture, for example, as a sector out of the carbon market. And I think we've seen in the current geopolitical scenario how India is clearly protective about its agri sector in general, anyways. But independent of all this, scientifically, the MRVs can be designed which can evidentially prove that it's a sequestration of carbon happening. And from private sector, I can tell you we do direct deal structuring between startups which are VC funded, and the models are designed around, let's say, aggregating farmers and then disseminating technology and techniques and methodologies to, let's say, sequester carbon or reduce carbon emission. And let's say, for example, doing dry plantation of rice, because the wet plantation emits methane. There's a approved methodology in VCM for sure where this technology can be adopted. And there are, so in the private space, as pure contractual rights, this definitely is already there.
That's
And
good.
no entity, government or otherwise, we've seen where the declarations, the consents, and the credit shares or the revenue of the credit share has already not been factored in. So anything between 50-50 to 60-40, again, depending on the project, these kind of structurings are there. So, but the other aspect, I think, which is the matter of the discussion in this panel, is the actual acknowledgement of an enforceable right. So that is where I can say that it would require some kind of notification, some kind of a legal notification, whether under, so we have again constitutional protections. We
Yeah.
have the legislation, like as I mentioned, Rights Act and Forest Conservation Act. There is Panchayat Secretary. There is another legislation which basically mandates Panchayat's consent on certain lands and developing projects or the land use around it. So, which is what I'm trying to say, these protections are there. But if you just simply say, oh, like a fundamental right or a human right, I have that enforceable, I can directly go to a court in writ petition, then you can go, like, you will have to use the Article 21 or a right to life or other things. So this is there. The protections is there, and which is where I think probably this was not felt that this needs to be legislated upon as part of a carbon market framework. But yeah, definitely something that can be considered by the regulators to definitely make it part of the scheme.
I'm going to actually riff on that particular piece, especially when you emphasize the growing importance of DMRV at some level and bring in Atul here. So I know, Atul, you also occupy a slightly fragile space where there can be such a thing as too much regulation. So in something like this, has that been the situation for you where it's sometimes become an impediment in terms of trying to define better integrity in your projects for communities? Or has it by and large served you well?
Yeah. See, first of all, everyone in the panel as well as the audience would agree that DMRV is quite a overused term nowadays. And this is, everyone has this platform also. And that's the beauty of it, that some parts of it can be very easily taken and it's good people are using it. But we have to really, I'll try to tell you today what it actually gives you. And if a DMRV is not there, what is not gives you. So at the core, DMRV is not just a monitoring tool, it's like a trust tool. In my previous discussion also, I said trust is very important. But and we have to define that whether it is enhancing integrity or it is just an expensive audit train. Those things have to be very clearly understood. Also, it contains the technical stack, satellite, drones, AI, all these things. These are easy to read. The difficult part and the question which all of us should ask around integrity and other things is that what kind of problems this technology is solving. And I feel from my experience at Earthtree and even before when I used to do waste management, DMRV can actually address three basic things which are very important. One is the measurement or integrity measurement, like how are you calculating the carbon? Is the calculation compliant to Vera or gold standard? Those things are still relatively easy, but remote sensing and digital technologies really help you do a proper measurement. The second, very important for nature-based solutions, because we're talking about nature-based solutions today, is governance integrity. On the ground, are we really doing the aspect workflows? Are we really engaging the community? Who's doing the governance? It is verifiable, visible. That part DMRE addresses very well. And third, which is emerging, and I would say every developer has to start practicing it, is integrity on sharing benefits. Because this is the part where the community gets directly impacted. Is the revenue reaching to the community? Is it visible? Is it verifiable? And even if it is a small money, is it coming to the land user is very, very important. So DMRV actually addresses these three things. And some more and more companies are doing part one, which is around the measurement integrity, where they are qualifying the credits as per the methodology through the use of DMRV. But I see the road is very far for many of us to work on the governance integrity as well as the benefit sharing integrity. Now, very quickly on Earthtree, we have a platform which has 5, 6 layers of data sharing, data, I would say annotation. We do field level canopy adjustment. We talk to different stakeholders, industry and buyers, community, everything. So it's trying to do the same thing which everyone is doing. We are also doing a lot of part on governance integrity. Now, FPIC everyone does, Sudhanshu. But what kind of interaction and engagement you are recording on the DMRV platform? How many meetings, how many stakeholder consultations you're doing? How you're involving the community? This is something we have been mastering. And since our project size is very large, 40 million trees in 3 years, 22,000 hectares, this is really very important for us to manage. The last part I would say is benefit sharing integrity. Now, this is this is actually a question to me also. Sometimes I think that we are through DMRV, we are able to provide every data to VVBs, registries, even to the buyers also. But is DMRV accessible to the community? This is something which is, I would say, I would put up a question to all of us that how far are we where a landowner can practically log in into a software and see how much credits have been made till now, how much benefit have accrued till now. I think Earthtree is working on this. We are actively working on an intelligence software which can do, but we are also a little far. But as an industry, as a trust, as if I have to see that ARR has to grow in the next 40 years, the DMRV has to give answers to the community also directly. So that's one thing which DMRV does. I will end with one last part. If we are not doing DMRV, what are we losing actually? So the thing which we are losing, let's say, compared to manual MRV, we used to do the recording once in a year. Someone used to go and collect the samples, and after the person collects the sample until next year, whatever is being changed, no one is recording that. Correct? Now, this is something which was never there. With DMRV, we can actually do real-time monitoring, which is something which we can actually do weekly, monthly, all those things can be built in. And this gives you a lot of confidence. So I would say that MRV tool should not be just a trustworthy tool for institutions to govern them. It should be a platform which can be used by developers, audited by VVGs, to some part accessible to communities. This will make a very good sophisticated system. And we're just trying to see how good we can do it. In the panel, I have our DMR of our data. So he provides lot of support to the communities. But as I said, we would also dream that one day we are able to showcase the community some part of the benefits that are coming. So that's my input, Ranchi.
I think thanks so much for touching upon the ladder part, right? That ultimately all these mechanisms, all these systems don't really work or succeed if the end beneficiary isn't able to visibly see any of it, right? Same applies to
quite
something
important.
like the DMRV as well.
Yes.
I think putting this context back to coming back to Krishna here at KCV. Krishna, in terms of what you mentioned, of course, you cited the example of the now slightly infamous episode with the reporting mishap, right? And what it also costed or the repercussions of it in Kenya with the project there, right? There was the Red Plus, and then there was, of course, also what played out with the cook stoves piece. I think now that Kenya's also been very much on the front foot in terms of defining its carbon market policy, do you somewhere see the demand in terms of high integrity projects, right? Or demand's the wrong word, the pipeline actually building out in recent times? Or is that pipeline still fairly nascent? Does it still have some catching up to do vis-a-vis the capital that's perhaps prepared to invest in it?
Thank you. Thank you so much once again for that question. I would say, yeah, the pipelines are there. We have good pipelines, but I would say mostly nascent with uneven level of maturity, though some of them have some, I would say, very strong originality on their volume. But also when you look at what is happening, volume generated is not as the same as volume sellable. So those are some of the things that we are trying to look
Okay.
at. But also within, when you look at Kenya and also what has been happening, Kenya has also been leading when it comes to developing its carbon market, and its also carbon market activation plans, and particularly with the SEMI. And now what we have is a functioning national carbon registry, which was I think launched around February 2025.
Yeah.
And Kenya is also actively trying to build a network of cross-border architecture of investors that need a signed Article 6.2 bilateral agreement with Switzerland. And also there is active negotiation ongoing.
Okay.
But when you look at the different kind of pipeline that we have had, a lot of them currently coming up within the country. And as KCV, we have had a number of them, for example, within the bioshare projects that are seeking investments from us. And this tries to show you that there's a lot of diversification in pipeline beyond the usual soil carbon and RED Plus model. And this also
Very encouraging.
are also being done at the local level. For example, we have some bioshare projects within a county called Migori that are really doing much to diversify the pipeline. But now, as investors like KCV, our opportunity for investments in these so many investor pipelines does not really need to wait for them to be deep enough. Yeah. So we need to, as investors, look at, for example, can we play the de-risking layer within this sector, which turns the nascent into projects that are more or less investable. Yeah. And can we also fund some of these processes, for example, the FPIC, the CDA processes right at the beginning before they become legal issues? And then the other aspect would be, can we also build a generation of projects that are compliant with the 2024 regulation from their onset?
Okay.
Rather than waiting to retrofit into them. Those are some of the questions that we are trying to look at, because yes, the pipelines are there, they're diversified. We have actually a new technology that I happened to learn of a few months ago, where investors are talking of rock mineralization, which is to me still a very new technology when it comes to generating carbon. And it is something that is still very new to us. And a lot of investors, for example, local investors like ACV, are still trying to learn. But the technologies are there. So the questions that we're asking ourselves is, are we ready to play the de-risking layer for these investments so that they can attract more capital, so that they become viable? Yeah, thank you.
Got it. Well, thanks, Krishna, a lot. And I think just touching upon that aspect on what are some of the areas which in the future would be seen as lucrative for investment or to be co-opted in the larger carbon discourse. There's a bunch of them that's actually been tabled in the Q&A section. Before we move there, I'm gonna just come to Sanjana very quickly for a piece before we open the Q&A. Sanjana, honestly, now between the voluntary carbon market space that's been existing for a while and now India's own carbon credit scheme launching this year formally, do you see this sort of coexistence between them as a clash or something more complementary?
Thanks, Sudhanshu. I think both of these markets address very different kinds of participants at this moment.
Okay.
The India carbon market is being built around, I think, more Indian contextual projects. And I think you will see a pipeline of more renewable energy projects. You will see a pipeline of more AW, alternate wetting and drying of rice projects, agroforestry projects, because they are more relevant to India. And you'll see that there are more people in India doing these types of projects. I think the VCM is having slightly now, it's shifting from mitigation or avoidance based projects to more of carbon removal based projects. So you're seeing a lot more of biochar, you're seeing a lot more of agroforestry, you're seeing what Krishna just mentioned, the rock weatherization, so ERW projects coming up, and more technologies around like direct air capture of projects. So I think both of these markets are serving different types of projects and types of participants. So I don't think that at this point they are competing against each other. I think they should be complementary in terms of having the same standards of how projects are built, having the same kind of methodologies and regulations and integrity or governance principles that we see in the voluntary market. I think India should definitely adopt those principles as it's building its architecture, because VCM has had that experience. It has that knowledge base already that has been created. And it would just be better for a market to, again, that is just structuring to take in these principles that have been established and have worked well for different market participants. So I'll keep my answer short over there because there are a lot of questions on the chat. So maybe we can now move to the Q&A side.
Super, super. Gonna start picking some questions here that have been addressed specifically to our panelists as well. So maybe picking up the first one here for Atul, right? And this again is probably also relevant to people outside working on projects outside India. Is that, Atul, I think a large part of the Meghalaya ARR project that you mentioned, it also involves working with the HIMAs, right? Which is
Yes.
for the larger group here. It's a centuries old traditional land governance system, only particular to that region in India, right? And it may not necessarily be aligned to the international carbon standards. So how has your project had to navigate that territory?
See, this is a very common question everyone asks, that you you had a target of 40 million trees, and why did you choose Meghalaya out of all the states of India? It's just a common question. So there are a couple of reasons. This is related to climate, but the largest reason was that it's a Schedule 6 state, and being a Schedule 6 state, most of the land belongs to private owners, and very less land belongs to the government. Now, it is not a solution, it's actually a challenge. There are three kinds of land in Meghalaya. One is clan land, what you just said, Hima land. There is community land and there is individual land. So we have to work with all the three lands. And there are many times the land boundaries are not available. There is no 712, there is no land records at the government. So our field people, along with the tablets and the GPS connection, used to walk along the boundaries of the clans, and as they walk, the polygon is created, and that polygon is then submitted to the local district authorities. Their district authorities talk to the landowners. We do common stakeholder meetings of all these people. Everyone agrees, and then hence we proceed. So when we were structuring and designing our program, we actually created this kind of process to Vera, and we explained them the local context, and we told them that we would be in many cases creating boundaries, and that boundary would be then endorsed and approved by the local authorities so that it becomes land which is belonging to a particular clan. There are still some clashes, Sudhanshu, that within a clan, one landowner says that this part is mine, that part is mine, but that we handle on a continuous engagement basis. Still now, things have been fine with us. So we're doing it very legit.
Thanks, Atul. I'm going to ask one other question before I move to the other panelists, right?
Sure.
This is from one of the other attendees, Mamta, that you mentioned experience in creating project methodology with landfill-bound textile waste, right? Have you been able to create any methodology in terms of avoiding this landfill gas emissions, to be specific?
There is some amount of work happening, and this is more into my previous role with waste management. I would say I did about 7 years with a Mexican company, but then I see some amount of work is happening, but I would say another 12 to 14 months is still there where all the consultations happen and things roll out. That's my knowledge.
Got it. Gonna move from here on to Umang. Umang, if I can quickly come to you. So what we've realized, of course, is because of things are today globally, right? The compliance bar in general is rising, where in terms of companies domiciled, with even Indian companies that are having their supply chains exposed to US or EU have to factor in these aspects on compliance. Now, for a carbon project developer in India that's trying to attract international buyers, the current setup with India's carbon credit trading scheme, is it going to be able to survive that level of scrutiny as things stand?
I think your question is very relevant but very technical. But seeing the comments on the chat, I thought maybe simplifying the whole discussion once would be very meaningful.
Sure.
Starting from your very question, whose carbon is it anyway, right?
Yeah.
So what are we talking about? We are talking about a carbon emission. And the ultimate goal is to decarbonize the whole planet, all
True.
activities that we do. But we all know that we need this transition, which is the whole crux of the debate between the global north and global south, that who's going to pay. Ultimately, I think the question boils down to the finance, the money, correct? This is what we do COP after COP every year, that the Western world, which has industrialized at the cost of the rest of the world, colonialization, whatever. I'm not getting into the political debate of things. Ultimately, our infrastructure, and this is the same issue with the West as well. Your heating mechanism is based on not on renewable energy. You have to redesign the whole infrastructure as it stands today. So, whose carbon is where the emission sits? And it is not just private sector, it's us people as well. Everything we use, the air conditioning we don't live without, the refrigeration, our cars, our this, that. So when we look at an issue, we have to look at it holistically. So this is a transition phase mechanism, carbon markets. The carbon markets, in my view, are not like 100-year or a forever, like a stock exchange phenomena. It is a transition period where the hard to abate sectors primarily are required to decarbonize. And while that transition phase of decarbonization, your dependence on fossil fuel energy, your transition to renewable energy, change in the assets, which we call stranded assets. If we overnight just leave the buildings which are based on fossil fuel based electricity, these are stranded assets of no use for anybody,
Yeah.
right? So while have emissions sitting in a place, we are designing projects which reduce emission. So there is reduction, there is sequestration, there is carbon capture. So I think for every audience also sitting here and putting out comments, we all need to do our little bit of own reading to inform ourselves what we are talking about and what exactly carbon credit as a unit is doing. A carbon credit as a unit is to replace a ton of a carbon emission. If I, as a steel manufacturer, and I emit 100 tons of carbon, and my mandate by law is to start reducing from 100 ton, and I'm only able to bring it down to 110, for example, then I have to buy the extra emissions that I do and set it off with a credit. Now, that credit again is not just something you said, I have reduced or sequestered and assign me a credit. There are scientific methodologies to prove that sequestration or reduction has happened, which is what we call DMRVs. I'm not getting into the technicality of things, but the two key markets are the compliance market, which is the regulatory framework of a jurisdiction is doing. Voluntary markets have already been functioning across borders, where the buyers in any other jurisdiction are also buying credits from projects in India or anywhere in the global south. And these will function alongside compliance market. It's not like one is going to overtake the other. Now, coming back to the emission, we focus on private sector and industrial operations as the main source of emission, but emission also happen in agriculture sector. For example, agri industry in itself is a great emitter of carbon,
Emitter.
by the way.
That's right.
So the we are talking about decarbonization of a country. We are talking about decarbonization of a sector. We are talking about decarbonization of a entity, a corporate. We're talking about it operational decarbonization. We are talking about a product level carbon emission, that your carbon intensity to produce one phone, how much carbon it emits. So there are so many complexities in it. Your carbon border tax it as a product level. You're talking about decarbonization of operations. There are direct buyer and seller agreements already, where the big corporates are pre-financing nature-based decarbonization projects. These projects are getting registered on voluntary markets, and the credits are being used by these corporates to set up their carbon decarbonization goals. So it's not like the markets are not functioning or the decarbonization initiatives are not happening. So, having laid down this, and I hope it clarifies that what we are talking about here today is specifically with regard to whose right it is. So, when you say an emission and when you say a credit, if
Yeah.
you're decarbonizing, let's say, emission in producing power or from a power plant, somebody asked that question there, then the emission belongs to the entity which is producing power. It is buying credit from the market, and the credit is owned by the project developer, which is the entity which is registering on it. And there is a contractual arrangement at the back end where whether it's a nature-based solution or it's a decarbonization technology or a carbon capture technology, because the technology side of things also requires massive capital investments. So somebody is footing that bill as well. So I think when we ask this question, we need to put all of this in perspective. The only right, I think, is the subject of discussion at this panel is when we do nature-based solutions or agro solution where there is a farmer or there is a government land or there is a community land, a forest land where the ownership is not particularly of government or of communities. That's where you look at these laws which gives the rights of protection, and that's where we are discussing that where should be a legal right which is enforceable by a member of a community to say that if the project is designed on this land, I should be entitled to be paid either in form of credit or revenue. So let me just stop here. I hope this kind of
Yeah, no, I
simplifies.
think Umang, that helps because very honestly, I think we do have a varied set of audience today. One who are sort of grappling with some of these things first time, some of them who are already practitioners themselves. I think one very pointed question, very relevant to you on something you mentioned early on the grant stroke CSR aspect. This has come from Paritosh. Question is, can NGOs who work with communities on ground have part of their share of that carbon credits to sustain and enhance their interventions towards an environment? Or will such an agreement with the farmer community be in contravention to the CSR laws?
There is no legal contravention per se.
Okay.
CSR obligation sits with the entities, as I said. So a company, and there are many guidance which is involved in CSR. So CSR, if you read right from the very discussion paper that has come out, see, the idea is that the businesses don't exist in isolation. Whether you are producing goods or providing services, you have your facilities, you have your footprint somewhere. And we see this as a symbiotic relationship between a business and a community where it is sitting and operating. And at a larger level, that these goods and services are also being sold to the society. So, India is one of the very few, probably the only jurisdiction which has mandated by law that the profit making entities of certain size and threshold spend that money. Correct? Now, there are directions and guidelines on spending that money on community or social impact related initiatives where it was seen most companies were spending money around where they are existing. So the government said that there are these backward districts or positively affirmative districts which require help. So there is a lot of guidance already put out into the framework of CSR that the money which is seen as a corpus which is available for social development should be spent in certain manner. Now, purely on the legal aspect of it, as I explained earlier, the company has to spend this money, which cannot be reused or brought back into the company either in a form of a credit to set off its obligations or as a fund to buy credits or etc. etc. It has to be directly spent on the community initiative. Now, the implementing agencies have their role in the whole CSR scheme of things, where the companies engage NGOs and at times they engage directly with the administrative gram panchayats, or in a collaborative way you bring in the even the public administration system into the play, purely on the carbon project design, which we have also done deal structuring, where
Yeah.
implementing agencies are integral or entrenched into the community and they facilitate this kind of credit based carbon project designing, execution, etc., etc. Then certain share, which is purely contractual, which is brought into the whole structuring. So,
Okay.
as I said, a startup which is aggregating farmers to help them decarbonize through certain initiatives, reach through, let's say, FPO. Somebody mentioned FPO. So, farmer producer organizations can also participate in taking some credit, but this is how you structure the deal in pure corporate terminology. There is no right or an obligation violation. As I
Yeah.
explained, CSR obligation is on the companies. They have to make the spend. They do it through the implementing agencies, directly with the community player. There could be association or SHGs from the community which bring this or help a company to fulfill its obligation. But at the community level, you can very well do your structuring as a simple contractual arrangement between the entities, and there is
All right.
no illegality in that.
Got it. Question here for Sanjana actually, and this comes from Mark, right? He's actually trying to elaborate on this point you made, or rather noted that benchmarks oftentimes in a lot of things that you all operate in are missing, right? And while he echoes that, would it be possible, perhaps, just in terms of stating out what some of these proposed benchmarks could look like in practice, right? Example, he gives minimum return to landowners, maximum percentage in terms of cost to consultants. Anything that you've seen in years of working that looks like a decent place to start?
Yeah, this is a great question. And again, because carbon projects are so different, like each project is different, even the same project type in a different geography comes with different challenges. I think it's in general difficult to establish very specific benchmarks. But I think, as I was mentioning, there are institutions like the Integrity Council on Voluntary Carbon Markets or the Task Force on Voluntary Carbon Markets, certain crediting agencies, when they are giving ratings to certain kinds of projects, right? So you can start looking at what projects are getting these AA ratings or A ratings, and what are the parameters on which these ratings or these good ratings are coming in, and try and incorporate that in your project. But it is difficult to replicate something that somebody is doing in one project to another project, because there it's all very contextual. Over the time, I think industry has developed certain benchmarks. So now you do say that you want to give a minimum percentage of 20% credits or 10% credits back to the community. So while that percentage may differ, I think everybody comes on the same page that yes, a certain number of credits or a percentage of credits has to go back to the community. Similarly, I think now Atul was also mentioning this, that DMRV is probably something that everybody is saying and talking about. So now the benchmark is slowly going towards the fact that you must incorporate some form of digital monitoring solutions in your project. But what those look like and what is the level of integration, I think that will differ. So I know that this is not a direct answer to the question, but it's also something that, yeah, I think benchmarks will just probably evolve as projects evolve. And yeah, I think minimum requirements will always come from standards and institutions. And then you'll have to adapt to the best that you can from there.
I think gonna just roll this next question out. Sanjana, thanks, right? And probably before you come to this, would like Atul, then Krishna, and then Umang and yourself to respond. Slightly open-ended, slightly provocative, but I do think it's a very valid question. Someone's asked is, can a project be technically successful in reducing emissions, but socially unjust? Atul, you want to go first?
You'll have to repeat the question. I'm sorry.
Yeah, the question is that can a project be technically successful in reducing emissions but socially unjust? I feel it's almost questioning the very existence of the concept itself. But yeah,
I would take a pass because I'm somehow not able to listen to the question. So there are some internet issues. Anyone else can
okay,
go. I'm at the airport, sorry.
no problem, no problem. Krishna, Umang, Sanjana, in any order, if you all would like to take a stab at that.
Yes, let me try to attempt it. Like I said earlier, let me approach it from our perspective as investors, is that we are not only looking at a project that generates carbon. Yeah, we're also looking at other aspects that translates into a resilient business, resilient community, and a resilient environment. And that comes to a fact that, let's give an example of a project that is sequestering carbon through conservation of forest. Yeah. So this project is already there, it's established, and it's doing its technical work it's supposed to do. But at the same time, remember we talked about free, prior, informed consent and community development agreements. So if this project also did not put into consideration the voices of the community, then during this process, it starts limiting access to this forest, to this very community that has been deriving their livelihood and depending on this forest and living in coexistence with this forest for a very long period of time, even before the project started, then it will become socially unjust. Why? Because it's limiting access to the forest of this very community that have been using this forest for very many issues, hunting, looking for traditional medicine, and all those other things. So once you limit access or you restrict the access, then socially, that project is supposed to be considered to be unjust. Thank you.
Thanks. So I think that is a really helpful response. Umang, Sanjana, Atul, you have the question now. If any of you want to.
No, I second what Ramji is saying. And see, this is always, and I can say as a lawyer, this is our jurisprudence of law also. We do the balance of convenience. We do the public versus sole individual development. If you pick up anything at all, which even innovations and technologies, think about AI today. The biggest
Yeah.
debate is around that, how resource intensive this is. So, should we stop AI completely? Can we integrate creating sustainable data centers? Or can we also look at some research and innovations where the dependencies on natural resources like water and energy again boils down to using the fossil fuel based energy? While India is very high on renewable energy space, we are one of the leaders in the globe, but still that transition is going to take time. This is for all of us to discuss. Tomorrow, are you okay that we would not have mobile phones because we don't want to extract rare metals from the land? Do we want to depend geopolitically on countries which restrict access to those metals? Then it becomes a national issue. We can't take things out of context and make it an issue like yes or no. Obviously nobody wants to do a social impact, but if you need a land to make a road to access the most inaccessible part of the country where indigenous communities are sitting and not having healthcare. Yesterday it was in the news how healthcare access by certain indigenous tribal communities is so difficult, and creating an 8 kilometers of a road is an issue. Now you can talk about forest land, forest protected land versus community rights versus development rights. So it is facts and circumstances that even jurisprudence takes into consideration to take a final decision on how to proceed on it. So I don't think anybody can give that answer in a complete black or white. So
Yeah.
that's where I'll stop. Yeah.
Sure, sure. Atul, you'd want to comment?
Yeah, I would say I would just agree to what Ramji said that yes, it is possible. And I sometimes feel that the registries and the markets generally ask how much carbon has been generated I don't see any registry asking what happened to the community while generating the credits. So, and the registries will never ask unless they make a very big change. Markets will never ask. I'm sure for that, because markets is a very commercial thing. But something should be done at the registry where some sort of compliance is required. That, yeah, we've given you credits, but can you please give us the status of what happened to the
Happened with them.
community? So I would give some part of role to the registries to evolve. That's my answer.
Super. Just going to take a few more questions. There's question here from Abhishek who asks, if someone owns farmland and wants to participate in a carbon credit project, can they directly express their interest, or do project developers usually approach farmers? If they can participate directly, where should they start or whom should they contact? Atul, that feels like that's got you.
Yeah.
This.
See, not every state is having a nature-based project, but I would say every state would have a mixture of reduction and removal projects. So somewhere some reduction projects will be going somewhere, and removal projects will be going. When it comes to specifically a question that someone has a large parcel of land and he's knowledgeable enough, so he should go to the Vera and Gold Standard website and see which projects are running in his state, and he should approach. And I would, if someone approaches us in Meghalaya, we open our arms and welcome him. So it depends. The projects are going. So a person having land should do some investigation. Nowadays, nothing is hidden from cloud and GPT. He should research and he should approach the developers.
Got it. Next question is to Sanjana, right? And again, Atul, you probably would have some point of view here as well, but I'm gonna just let her go first with this. Is when you're dealing with communities, Sanjana, right? As someone who's straddling both worlds, this approaching as an aggregator, and then of course the fact that you're oftentimes working with multiple landowners, right? So when it comes to the distribution of revenues, and I understand a lot of it is going to be in the future, is that pegged against that ratio of the land and the ARR they're owning? Or how does that ownership essentially get resolved from the revenue generation standpoint?
Okay, so just if I understand the question correctly, are you saying that the land equates to the credits that they get?
That is a part of the question. Yeah. Is it as simple as that?
Yeah, most of the time when you're just looking at a carbon credit sharing ratio that goes back to the farmer, it's always a percentage of the credits that is generated from their farmland, right? So if I have obviously a larger land parcel, I will be able to generate more credits, and then we always sign one-on-one agreements with the farmers. So it's always a percentage that goes back to the farmer. So whatever is generated from their land, percentage of that will go back to them. So somebody with a bigger share of land will get a little bit more than someone who has a smaller share. But again, I think in setting the larger context, it shouldn't always just be the ratio of credits that is going back, but overall how the community is actually benefiting from the work that is being done. And if you are able to come up with mechanisms that support the community at the community level rather than an individual level, I think your project or the interest in your project will stay for longer, or will be stronger.
Got it. Maybe want to take one last question from the set before we come to closing comments here. This is a question from Benedict, right? Value in carbon markets is created on ground but captured downstream, often because this proof of impact is slow, which it is, and verified by parties tied to the buyer. Do the set of panelists here see independent verification and faster verified payment reaching communities as the lever for this equitable value capture, or to make the field a little more level playing that way?
It's a very good thought, and it's a very good. Someday we should arrive at this. But then I always feel that, and this is something which has come out of practice, Danshu, that why everyone always blames markets and industries, there is some portion of work which has to be taken by the landowner also. They are not this is not a free deal for them. This should be very clearly understood. We are not coming as angels and we'll spray the wand and you will start getting money. So a large portion of maintenance and a large portion of selection of species according to you, try and get some agro commodities within the plantable areas. All these support has to be done by the landowners. So I would say there are methodologies, there are methods where this can be advanced. It's quite possible, but it also gives a lot of risk to the developer that what if things don't span out? And all the agreements which we do with the landowners, they are not like heart and stone that he will always protect trees. So this is very fragile area. And the only answer, what Sanjana was saying, that what kind of value you are creating, it all depends on that only. Is the farmer feeling? There are so many farmers and landowners which comes to us and say, I've got 35 hectares of land. Give me the rate of return. How much should I invest and how much should I get per hectare? That kind of approach, we say no, because this is not for a, it's not a commercial proposition. We will you start the discussion with rate of return. You have to love trees. If you're not loving trees, no, we're not working with you. That's something which I would say is more practical.
Thanks for that candor. I think some level the question was also looking to explore that. We're going to actually come to closing thoughts from each of you. There are a few more questions. What we're perhaps going to try and do is find a way to formulate or rather pick up some of these to have them answered based on also who they were addressed to also somewhere bring closure to the audience here. But I want to say at this stage, as parting thoughts, and from each one of you, if we can get maybe one point of a wish list in terms of where you find yourself. So, right from Krishna as an investor to Umang on the legal regulatory side of things to Sanjana and Atul, who've seen more on the project development aspect. One thing, right? One thing which is maybe top of your priority in terms of what is a wish list or something to change. So, Krishna, I'm going to start with you. If you can share that and we can follow from the rest there.
Sure. I think we've discussed
Atul, we
this.
wanted Krishna to go first. Sorry.
Thank you very much. Yeah, so maybe one key thing that I would say is that for some of these projects to make sense to us, we may need to find a way of aggregating the smaller projects so that they can also make business sense to investors. Yeah, the projects are there, but some of them are so small in scale that does not make a business sense to investor. So if we can find a way of aggregating related projects, for example, if we are looking at sequestration, we aggregate projects that are within a given area, and then also biochar producers at the same time and other technologies. We aggregate smaller projects, and then we see how this can now attract investable income from investors and also to make it sellable, because even for you to sell carbon credit, you need to meet a certain threshold. And when the projects are so disaggregated, it becomes very hard to capture that market. Thank you.
Got it. No, thanks, Krishna. It's actually very refreshing to have that insight. Umang, if we can come to you next.
Sure. See, my wish is just not purely legal because legal lays down the framework. So I will come with a wish list that finance definitely is important. Everybody looks at the ROI, but I will draw a comparison between a carbon market and a normal equity market. The retail investor which buys shares of the market does not own the share in the company as such. You don't become the owner of the company. So this is how this framework works. And depending on different projects, as I was sharing, I have advised companies where an sustainability investors has conditioned every tranche of money release at a very farm level intervention by the startup or the company where the investee company's management sits, that even gender diversity at the farm level or the livestock feed composition, because we know livestock also emit methane emission. So
Right.
first of all, I think the vision thinking or out loud thinking I'm doing is that while money is at the center of everything, we should not just look at from ROI perspective. Carbon market and carbon credits are a means to decarbonize. So our eventual goal is to decarbonize. If in agricultural practices or nature-based solutions, farmers or communities are getting a training, a methodology, a skill to decarbonize, which also gives any kind of commercial benefit, that should be the approach to look at this, and it should be welcomed. And all collaborative stakeholders, from financer to a company which invests in a carbon project, nothing happens for free. Somebody, and it requires a lot of money, which is why I think Ramji is saying that for a small scale project or a small land farmer, a carbon project doesn't make sense. That's where consolidation, if aggregation comes into the play. But if every individual partner in probable partner in the ecosystem says, what is in it for me, then the projects will not take off. We have knowledge partners, we have technology partners, we have investors, we have regulators and government, which is also playing a role in all of this, in facilitating through laws and regulations, incentives, tax incentives. There is holistic scheme of things which is at the play. So I would say the first premise to start up from is from trust. Somebody is putting in money to develop a technology or a project which eventually results in carbon decarbonization. That's the first premise. And then create a structure which brings win-win for everyone. Then you have something for everyone and everybody is happy at the end of it. Otherwise, as we are seeing, things are not taking off, even with the technology and methodology being available in the market. So yeah, that's my wish list.
Thank you. Thank you. Perfect timing for your video back on, Atul. I'm going to come to you next. One thing from your wish list.
Okay, good. Sorry, I'm in a hurry to reach to the terminal. That's why I was speaking first. No worries. So see, I'll tell you very practical thing. Communities provide land, labor, stewardship, permanence. Markets provide you capital, scale, demand, and all of us should feel that neither of one can solve the climate alone. So this has to be a hand-in-hand approach. My wish list is that tomorrow the digital MRV solutions become so strong, so robust that the question about transparency, authenticity starts moving away, and the communities trust the markets, the buyers trust the communities and developers. That can only be bridged through very carefully crafted DMRV platform. And my wish list is that we speak so much of IT, so much of advancement in IT is done. Nowadays, cloud is breaking everything. Why can't we have a responsible DMRV? And I would love to be a part of any structure where a responsible DMRV is created. That's my wish.
Super. Super. Thanks. We'll
Just
wrap this up with you.
just to close, I think what I've seen is that there's constant information asymmetry in this market. Even if someone who knows carbon market is constantly not wanting to know more. So I think my wish list is that if yes, technology or just creation of public digital infrastructure, knowledge assets can start bridging this gap, I think we'll all be able to make more informed decisions. So that
Thank
would be a
you.
good place to start.
Yeah, lovely. And not that anyone's asking me, but my personal sort of wish list on this would really be to have more concerted and consistent conversations around topics like these, which has also been a huge learning, I think, for all of us as at the Sankalp team. Because, and Umang somewhere captured this really well, that even in a setting like this, which is like a snapshot into the larger interest around carbon markets, this 200 plus audience had a range of sort of fluency and interest levels across different parts of the carbon finance space. I think to just make this conversation a lot more into the larger climate discourse that's happening. We're already seeing that happen, one on the sort of piggybacking on London Climate Week, but beyond that, to make it a little more systemic. And we know here at Sankalp, we have a role to play. This is more of a shout out stroke takeaway for self. With that, thank you so much to all the people who joined in, of course, to our incredible panel here. Thanks to each and every one of you. Like I'd mentioned at the start, this is the second episode in a series of dialogues that will be happening through the year. The next one, incidentally, is end of next month, which is actually focused around water security. And again, what it means in terms of the different stakeholders that are going to be most impacted and also have, therefore, most at stake with how water security is now playing an increasing role. Do join us for that if you're already signed into our different modes of messaging or newsletters you'll be hearing anyway. But that's where we are at today, answering some of the quick sort of questions in the group chat. We have been recording this session. There's also a live recording. So depending on whatever is more familiar, comfortable for you, you can access that. We're also going to be taking out a short thought piece on what was captured across the, I think now near 2 hours of conversation that we've had. It also makes it a great starting point for any of you to build on that. And since you have access to our different lovely panelists here, people I think also free to pick on one-to-one conversations on understanding or unpacking certain things in more detail. I'll pause here. Thank you everyone once again. And we look forward to hosting you all on the next episode of Sankalp Dialogues. Thank you.
Thank
Thank
you,
you for
everyone.
having us
Bye.
over. And once again, thank you so much. I really enjoyed the conversation, and I will touch base with other panelists also independently. There is a lot to learn.
Goodbye. Have a nice evening, everyone. Bye.
Thank
Thank
you.
you. Thank you,
Bye-bye.
everyone. Bye-bye.
Bye.
Right. Thank you.